Listen closely, because this hits where it hurts. The moment when a capital call drops like a bomb on your investments, and suddenly, your portfolio feels like it's bleeding, your strategy shaking, and the market. It's swinging wildly, out of control. This isn't some random chaos. It's a storm you see coming if you pay attention. You've felt the gnawing panic when cash is pulled out of funds unexpectedly, dragging whole markets into turbulence because the system isn't set up for calm. It's wired for reaction. Capital calls aren't just paperwork, they're triggers, sudden demands that ripple through every corner of finance, sparking volatility that feels like betrayal when all you wanted was stability and growth. Here's the raw truth. When limited partners get these calls, the real pressure isn't just fulfilling the cash ask, it's the seismic shockwaves it sends through the market's veins. Why? Because capital calls mean someone's pulling resources tight, forcing exits or selling assets fast. They unsettle liquidity and inject fear into everyone watching. That fear cascades, from fund managers scrambling, to founders bracing for cuts, to investors like you wired on edge. It feels like the floor under your feet is cracking, and sometimes, frankly, it is. But it doesn't have to be a black hole of stress and loss. You want control when the chaos starts to roar. Start by knowing the rhythm beneath the noise. Capital calls create pressure points, not random shocks, but predictable moments when capital moves, assets move, emotions spike. Own the map of these pressure points. Track when your funds historically lean on calls. Understand the triggers behind a call's timing. That's your first weapon, anticipation. Don't get caught scrambling. Instead, prepare liquidity in advance. Don't just rely on dry powder in your pocket. Build reserves that breathe with you, not against you. Next, stop thinking like a passive player in this drama. Take ownership. Use your voice as a limited partner. Demand full, brutal transparency from your fund managers. Know exactly what the capital will buy, or what they're forced to sell if they don't get it. When capital calls are looming, pressure your GPs for scenario plans. Not generic answers, but real strategies for volatility and its fallout. Speak openly about fallback plans for quick exits, hedging tactics, or restructuring. The most dangerous risk is being in the dark as markets tremble. Then comes the mindset shift that few dare to make. Embrace volatility as a signpost, not a threat. It's the system signaling where stress points lie, where opportunities hide beneath fear. When markets jump at capital calls, don't freeze. Get aggressive on analysis. Identify where the forced selling creates undervalued assets and position yourself to move fast with conviction. The real power is in exploiting disorder, not hiding from it. Partner networks matter here. Lean into your connections, share intelligence, create alliances that move capital and information fluidly when seconds count. Finally, never let the system's illusions cage you. The world that tells you stay passive or wait for stability is selling a lie. You are designed to rise above that, to break the cycle of reactive fear and broken promises. Forge your individual path by building synergy with the rare few who see through this noise. Founders, investors, leaders who don't just survive volatility, but master it. It's brutal, it's raw, but it's the only way out of the cycle of being shocked by capital calls and market swings. You want to break free? Demand transparency, prepare liquid buffers early, get inside the timing and triggers of capital calls, use volatility as your hunting ground, and build real, fierce networks that act faster than the market's panic. This won't be easy. It will burn your ego and test your will. But if you want to shape the future, not just chase it, this is the battlefield you own. Nothing less.